All right, everybody, buckle up because we're diving headfirst into the wild world of SoFi's income statement today.
Yeah, we're talking crunching numbers, cutting through the financial jargon.
And hopefully by the time we're done, you'll walk away feeling like you could, I don't know, maybe even teach a thing or two about SoFi's financial health.
Absolutely, and we're not just skimming the surface here, we're going deep.
We're talking deep dive into their financials from 2020 all the way through to the most recent trailing 12 months, which, just as a refresher, means we're looking at the past year's worth of data.
That's right, and keep in mind, SoFi is a personal finance company, so understanding these financial statements, this is their playground.
It's in their DNA, right? And what I find really interesting is that when you look at their financials, you can really see their growth strategy reflected in those numbers.
Yeah, absolutely. And speaking of growth, their revenue growth has been pretty remarkable, to say the least.
Yeah, let's put some numbers on that because in 2020, they brought in $565,532. Fast forward a few years and bam, that number skyrockets to $2,322,452 out.
That's massive. It makes you wonder, what's their secret sauce?
Right. It practically screams, we're doing something right. But, I mean, let's be real. That kind of rapid growth usually comes at a cost.
You hit the nail on the head, and one of the first places we see that cost is in their interest expenses.
Yeah, let's talk about that because looking at their interest expense, that's gone from, what, $185,606 in 2020 to over $1 million in just a few years.
Yeah, you're right. That's a significant jump. So how do we make sense of that? Well, remember what SoFi does. They're in the business of lending money.
Right. Loans. That's their game.
And to lend money, you need capital.
Makes sense.
And often companies, especially those growing quickly like SoFi, they get that capital by borrowing it.
So they're essentially borrowing money to lend money.
That's the gist, yeah. And it's a strategy that can work, but it's like walking a tightrope, especially when you factor in rising interest rates.
Yeah, because those interest payments, those can really start eating into your profits. So we've got this surge in revenue, which is great. But fueling that growth is an increase in borrowing, which leads to higher interest expenses. How does all this affect their bottom line? Are they actually making money?
That's the million-dollar question, isn't it? And to answer that, we need to look at their net income, or in this case, net loss. And what's interesting is, despite the impressive revenue growth.
Right, which we can't ignore.
Exactly. SoFi is still operating in the red.
Still seeing those losses.
Yes, and in 2020, that loss was $483,937.
Okay, so pretty substantial.
It was, but it's important to note it has decreased to $113,324 in the most recent trailing 12 months.
So the losses are shrinking, which is a good sign, but they're not out of the woods yet.
Not quite, but it does make you wonder, what does this all mean for their overall financial health?
Yeah. What's the takeaway for investors?
Well, I wouldn't hit the panic button just yet, at least not yet, because remember, SoFi is still very much in a growth phase.
They're still relatively young in the grand scheme of things.
Exactly, and they're pouring money, and I mean a lot of money, into expanding their operations, marketing, all that good stuff.
So it's like they're making big bets on their future, hoping these investments will pay off down the line.
Exactly, and that's something investors always need to keep in mind. With growth stage companies, it's all about potential, but potential doesn't always translate into profits, at least not right away.
It's kind of like they're playing the long game, right? Making these strategic moves now and hoping they'll pay off big time down the road.
That's a great way to think about it. It's all about long-term vision.
But those long-term bets, those can sometimes have an impact on shareholders in the here and now, right? With that whole share dilution thing.
Yeah, share dilution, that's a big one, and it's something that can trip up a lot of investors if they're not careful.
Yeah, it's one of those things that sounds way more complicated than it actually is.
It's really not that complicated when you break it down, so let's do that. Looking at the numbers we see, SoFi's average shares outstanding they've jumped up quite a bit, from about 116,153 in 2020.
Okay, so a pretty substantial increase.
To a whopping 935,097 in the most recent trailing 12 months.
Wow, okay, so how does that work? Because essentially they're issuing more shares, right?
Exactly, and when a company issues more shares, what they're doing is dividing that ownership, think of it like a pie, into smaller and smaller pieces.
So if you owned a slice of that pie before, now that slice might seem a little smaller.
Right, but here's the catch. Even though your slice might be smaller, the overall pie, the company itself, that's hopefully growing bigger.
So it's a trade-off. You're potentially getting a smaller piece of a much larger pie.
Exactly. And companies like SoFi, they use this strategy to raise capital, which helps them fuel their expansion plans, invest in new products, you name it. They're essentially baking a bigger, tastier pie.
But for the individual investor, it's crucial to understand how that dilution might affect the value of their holding.
Absolutely, because you're banking on that smaller slice being worth more down the road.
Okay, so let's recap for a sec. We've got this impressive revenue growth,
Definitely eye-catching.
but it's coming at the cost of increased borrowing, which is leading to some hefty interest expenses.
And those interest expenses, those can't be ignored.
Right, and then on top of that, we've got this whole share dilution thing going on, which
Yeah.
adds another layer of complexity to the equation. So where do we go from here? How do we begin to piece all of this together?
Well, I think it's all about understanding the story these numbers are telling us.
Because numbers on their own, they don't mean much without the context, right?
Exactly. Financial statements, they're like snapshots of a company's journey at a specific moment in time.
I like that, snapshots.
And by looking at these snapshots together, we can start to see the bigger picture.
Identify those trends, those potential risks, and of course the opportunities.
Good. So when we zoom out and look at SoFi's trajectory, the trend we're seeing is one of aggressive growth. But it's not without its challenges, right?
It's a bit of a balancing act, isn't it? They're spending a lot of money to attract new customers, expand their reach, which is reflected in those impressive revenue numbers.
No doubt about it. Those revenue numbers are impressive, but to achieve that growth, they're taking on debt.
Hence those significant interest expenses we talked about.
Exactly. And then there's that whole balancing act of raising capital without overly diluting shareholder value.
So yeah, it's like walking a tightrope, one misstep, and it could all come crashing down. But if they can maintain their balance, keep that momentum going.
The potential rewards could be huge.
High risk, high reward.
Exactly. So the question is, are they making the right bets? Are they striking that balance between ambition and financial prudence?
Because they're playing with real money here, real stakes.
Absolutely. And that's what makes analyzing a company like SoFi so fascinating. It's like a front row seat to this high stakes game of financial strategy.
And it's not just any company. We're talking about a personal finance company, which adds a whole other layer of intrigue to the story, right?
Yeah, it's almost like they're living out their own financial advice in real time, which is kind of poetic when you think about it.
It's like they're walking the walk, not just talking the talk.
Right, putting their money where their mouth is.
But that also puts them under a microscope, right? Because their customers are also watching how SoFi manages its own books.
Absolutely, and it's got to make you think, right? Imagine you're a SoFi user, you're thinking about maybe trusting them with your savings, your loans, and then you take a look at their income statement and you see these, I don't know, maybe kind of bold financial moves. It definitely makes you think.
It becomes a part of their story, for sure. So with all of that in mind, what's the big question investors and even just everyday customers should be asking themselves about SoFi?
I think it boils down to this. Do you believe in SoFi's long-term vision? Do you buy into this idea that their strategy, even with the risks, is going to lead them to the top of the personal finance mountain?
Because that's the gamble they're taking.
They're going all in and they're asking investors and customers to come along for the ride.
And it's not a sure thing, not by a long shot, which I think is what makes analyzing a company like SoFi so fascinating. It's like a masterclass in risk and reward.
Totally agree. It's a front row seat to the world of high finance.
And on that note, I think we've given our listeners a lot to digest today.
A lot to think about.
We've gone from those raw numbers, explored those potential opportunities, and, let's be real, the risks of SoFi's approach.
Because every investment has two sides to the coin.
Always. And hopefully after this deep dive, you're feeling equipped to draw your own conclusions.
That's what we want, informed investors.
Informed investors making the best decisions for their own financial journeys. And hey, next time SoFi comes up at a dinner party,
You'll be ready.
you be the expert, dropping knowledge about income statements like it's nothing. But
Yep.
seriously, folks, that's what we're all about here. Go beyond the headlines. Dig into those financial statements. Ask the tough questions. Because the real insights, those are often hiding in plain sight.
Couldn't have said it better myself.
And on that note, we're going to wrap up this deep dive. But remember, until next time, keep exploring, keep that curiosity alive. Because the world of finance, well, it's full of surprises.